I love dividend stocks, and I love Roth IRAs. You know what I love even more? Putting them together into a dividend stock Roth IRA. In this video, I'm going to peel back the curtain and give you an exclusive inside look into my dividend stock Roth IRA. What's up everybody, welcome back to the channel. If it's your first time here, my name is Jay, and on this channel, I give you the tools, the tips, and the tactics that you need to get the most out of your money. Now we've passed a couple of cool subscriber milestones on this channel lately, and instead of making one of those videos where I pat myself on the back for reaching a certain number of subscribers, I thought I'd just put out a cool video that you guys might enjoy, where I give you a peek behind the scenes and I'll show you all of the stocks I own in my entire $50,000 Roth IRA account. Now before we get started, it's important to note that my Roth IRA is only a small portion of my overall investment portfolio, so the weighting of what stocks I hold and what industries and sectors they represent isn't a reflection of how my overall portfolio is weighted. Likewise, for the past couple of years, I haven't been eligible to contribute to a Roth IRA, so this account hasn't been a big focus of my investing dollars and my investing attention. Now, if you've watched any of my other videos, you're well aware I'm a buy and hold investor. So what you'll see is the stocks I own in here, much like all my investments elsewhere, I like to buy and hold on to, and only in the rarest of circumstances am I going to sell. It's also important to note that just because I own these stocks does not mean that you should own these stocks. I've owned a lot of these stocks for many years, and I couldn't tell you myself if I would buy more shares of them today without going in and doing further research on their prices today. So just them being represented in my Roth IRA doesn't mean I think they're a good buy at whatever value they're trading at today or anything like that. It just happens to be what I hold. I hold a total of 14 stocks in my dividend stock Roth IRA, and we'll go through them one by one from the stock that I hold the least amount of value in to the stock I hold the most amount of value in. So if you want to see the heavy hitters, you got to stick around to the end of the video. So this is kind of a new concept of a video for me. I haven't revealed many personal details in the past. So if you like this video, you want to see more stuff like this, leave me a comment down below. Let me know what you want to see, what you want to know more about, and I'll see what I can do. Now with that out of the way, let's get into the stocks. Now the first stock we come to in my dividend stock Roth IRA is Ingersoll Rand. Now Ingersoll Rand is a big company that makes very large industrial machinery. I actually bought Ingersoll Rand at almost the exact perfect time at the very bottom of the financial crisis back in 2007, 2008. So Ingersoll Rand is probably my best performing stock of all time in terms of price growth. Now, they've recently gone a spin-off where they split themselves into two companies, and this particular part of the spin-off that kept the Ingersoll Rand name is no longer a dividend-paying stock. The fact that this stock no longer fits the goals of this portfolio as a dividend growth portfolio, and accompanied the fact that my position in this stock had grown so far and above most of the other stocks I hold, I did sell a large portion of this stock pretty recently. So even after all that is said and done, I own 32 shares of Ingersoll Rand, and it's currently worth about $1,100. The next stock in my dividend stock Roth IRA is KeyBank. Now KeyBank is a large regional bank here in the Northeast and Midwest. They're based out of Cleveland, Ohio. I actually bought this stock again back around 2007, 2008 when it was First Niagara Financial Group, which at the time was a local bank here in the Buffalo, New York area that was weathering the financial crisis extremely well and put themselves in a position to make a couple of large acquisitions. Now their strength during the financial crisis and the acquisitions they were making led me to pick up shares of First Niagara. Now a couple of years down the line, First Niagara themselves got bought out by KeyBank, and that's how I end up owning KeyBank. Now if I'm being honest, the share price of KeyBank has done next to nothing in the entire time I've owned it. It's basically held steady, but KeyBank is currently yielding about a 6% dividend yield, and they've shown a willingness to increase the amount of the dividend they pay for 10 consecutive years. So that big yield and the dividend growth is why I continue to hold on to this stock. So I currently have 95 shares of KeyBank, valued at around $1,200 currently, and it has a 6% dividend yield. Now it's important to note at this point, I just thought of it, that all of these stocks, I do reinvest the dividends back into more shares. So I actually own fractional shares on most of these stocks, so I've rounded the number of shares I own to the closest whole share. The next stock in my dividend stock portfolio, and one I've mentioned in other videos, but not for a good reason, is BP. Now BP, as you may well know, is a huge energy company, big oil company. I bought them thinking I was a smart, savvy investor right after their share price got hammered during the Gulf oil spill back in 2011, I believe it was. I thought, okay, oil companies have oil spills every now and then. Share price is getting hammered now, but they'll rebound quick and I'll make a lot of money. Well, as you may well know, I was wrong. But I continued to hold on to BP because BP paid a massive dividend, which they were able to maintain most of the last decade. But if you followed BP at all recently, you know they once again cut their dividend. They're once again struggling as a company, as they have been for most of the last decade, if I'm honest. So because of those factors, I sold a large portion of my BP holdings within the past 6 months or so. Now I still have about 87 shares of BP that are currently worth about $1,800. Now I'm still holding on to my BP shares because even after the dividend cut, they're still yielding about 6%. So that 6% dividend yield, combined with my stubbornness, still maintaining to believe that somehow BP will turn it around eventually, is why I still have this small portion of their stock. Now with some of the cash I received after selling my BP shares, I bought shares of the next stock in my dividend stock Roth IRA. American Express. American Express, as you may know, is one of the largest credit card companies in the United States. They're also a longtime favorite stock of Warren Buffett's. And honestly, if it's good enough for Warren, it's good enough for me. So I currently own 20 shares of American Express stock worth about $2,000. Now, American Express has paid out dividends for decades. They're currently yielding about 1.74% on their dividend yield, and they've shown a consistency to raise that dividend for each of the past 8 years. So that commitment to dividend growth, combined with the growth in the stock price that I believe is possible, is why I bought American Express. The next dividend stock I'm holding in my Roth IRA is a German software giant, SAP. Now, I've made a number of stops at different companies along my career, and the one thing that always seems to be constant is they use SAP's software in some form. In my last 2 companies, the companies were fully integrated from the point of sale to the invoicing. Everything was in SAP. And the companies I've worked at are far from alone. SAP is everywhere out there in the corporate world. And this was another stock I bought after I sold off part of my shares of BP and Ingersoll Rand, as I mentioned earlier. I have 12 shares of SAP stock worth again about $2,000, and SAP is currently yielding 1.05%. So to this point, all the stocks I've mentioned, I've held about $2,000 worth or less, so they're really not that big of holdings. Now we've crossed the $2,000 barrier mark with Crown Castle International. Now Crown Castle is an REIT, or REIT, Real Estate Investment Trust. Crown Castle owns real estate across the country that cell towers are built on and fiber optic cables are laid through, and because of that business model, I think they have a lot of room to grow in terms of share price. Crown Castle also pays out a pretty nice dividend. Their current dividend yield is about 2.99%. Their dividend is well covered for an REIT, and there's room to grow. So my stake in Crown Castle is 17 shares with a current value of about $2,800. Now, if you watched my earlier video on the 3 dividend stocks that I would buy and hold forever, you're gonna recognize this next name. Because spoiler alert, it landed at number 1 on that list, but you should still watch the video. And that stock is Visa. Now you may know Visa as a credit card company, but the difference between Visa and American Express is Visa owns the transaction processing network. So every time you swipe a credit card or a debit card with the Visa logo on it, Visa collects kind of a toll for processing that transaction. They don't hold any of the consumer debt. If you maxed out your credit card with a Visa logo on it, Visa isn't holding that debt. Your bank or whoever issued that card is. So I think that's an amazing business model with only room to grow as we transition from cash to digital payments. Visa has also been one of the best performing stocks I've ever held in terms of share price growth. And while they've only been a publicly traded company for a short while, they've also shown a commitment to dividend growth. They've increased their dividend each of the last 12 years in a row. So I really think Visa is on their way to eventually joining the Dividend Aristocrats list, which is stocks that have increased their dividends for 25 years in a row or more. So while the current dividend yield is only 0.58%, I think the combination of share price growth and their commitment to increasing the dividend growth is a great reason for me to own Visa. Now here in my Roth IRA, I own 15 shares of Visa worth $3,200. It is important to note I owe a much larger stake of Visa in my normal taxable brokerage account. So I own it in two places. That's how much I like it. Continuing to work our way up the ladder of stocks I own the least amount of to stocks I own the most of. Next up is Verizon. Verizon, as I'm sure you're well aware, is a telecom giant. In my opinion, they have the best cell phone network in the United States. I've had them for my cell phone and internet and various other things for years. And Verizon always seems to be on the forefront with new technologies such as rolling out 4G, now 5G, and whatever else is going to come down the line. Verizon was another stock I bought during the financial crisis around 2008 and have held ever since. I currently have 55 shares of Verizon stock worth about $3,300. Verizon's currently yielding about 4.14% dividend yield, and they have a long history of dividend growth. They're another stock where I think they're destined for the Dividend Aristocrats list. And that brings us to the most recent purchase in my dividend stock Roth IRA. I bought this stock only within the past month or two, and it's Lockheed Martin. Lockheed Martin is a giant aerospace and defense company that lands a lot of government and military contracts. They make fighter planes, helicopters, radar systems, all sorts of things for the military. And if you pay attention to how much the US spends on the military, you'll know why I think Lockheed Martin is a great investment. So like I said, Lockheed Martin is a recent buy for this portfolio. I have 11 shares of Lockheed Martin worth about $4,400. Now again, you're going to notice a trend. Lockheed Martin has 17 years of consistent dividend increases. So again, I think they're destined for the Dividend Aristocrats list. If you're noticing a trend, yeah, I like to get in a little early on these stocks, the ones I think are going to make that list, rather than just sticking to that list. So their 17 years of dividend increases in a row, combined with their current 2.43%, makes them a good dividend stock to have here in my Roth IRA. So we're just about to my 5 largest holdings in my dividend stock Roth IRA. And if you're still here with me, why don't you hit that like button down below, let me know you're liking this video, subscribe to the channel if you haven't already. I'm always this entertaining, I promise. And with that said, we get into the 5th largest stock I hold in my dividend stock Roth IRA, Trane Technologies. Now if you remember way back to the beginning of this video, I mentioned the company Ingersoll Rand. Ingersoll Rand spun off into 2 companies. One kept that Ingersoll Rand name, the other became Trane Technologies. So while I sold off a portion of my shares of the company that kept the Ingersoll Rand name, I held on to my Trane Technologies shares because this part of the spin-off still pays a dividend and fits within this portfolio strategy. Now the current dividend yield for Trane Technologies is 1.79%, and they have 10 years of consistent dividend growth. I currently hold 50 shares of Trane Technologies worth. Now we're at the 4 largest holdings of my dividend stock Roth IRA. And just to get it out of the way now, I bought all of these stocks back around the same 2007-2008 timeframe during the financial crisis. If you haven't guessed it yet, that's when I opened my Roth IRA account and started investing in it. So the 4th largest holding in my dividend stock Roth IRA is ADP. Now ADP is a huge IT services company. They do things like payroll processing, tax forms, other HR functions for probably your company and many others in the country. ADP is also the first company in this list that currently belongs to the Dividend Aristocrats. That means ADP has increased the amount of the dividend they pay out for at least 25 years or more in a row. So that dedication to consistently increasing the dividend they're paying to investors, coupled with the 2.58% dividend yield they're currently paying out, is why I own 45 shares of ADP that are currently valued at around $6,300. All right, now we're getting to the good stuff. We're up to the top 3. The next 3 are the 3 largest holdings in my Roth IRA. And coming in at number 3 is another name you'll recognize from my 3 favorite dividend stocks of all time list, Johnson & Johnson. Johnson & Johnson, as you may well know, is a huge pharmaceutical conglomerate, making everything from Band-Aids to prescription drugs. And while ADP was on the Dividend Aristocrats list, Johnson & Johnson one-ups them by being a dividend king. This means that Johnson & Johnson has paid and increased their dividend for 50 years in a row at a minimum. So Johnson & Johnson is about as stable of a dividend-paying stock as you could possibly hope to imagine. They're always paying and raising that dividend. They're currently yielding 2.66%, which is why I own 43 shares of Johnson & Johnson that have a current value of $6,600. The number 2 largest holding in my dividend stock Roth IRA is another conglomerate company, 3M. Now 3M is another one of those companies that makes just about everything under the sun. They're a company that thrives in good economies and bad. 3M is also a dividend king, meaning they've paid and raised their dividend for at least 50 years consecutively or more. They're currently yielding a very nice 3.61% dividend, and I hold 45 shares of 3M, currently valued at about $7,400. And that brings us to the number 1 largest holding in my dividend stock Roth IRA. Before I tell you what it is, once again, please hit the like button down below. It tells YouTube other people should see this video. It helps me out. Subscribe to the channel if you haven't already. I put out new videos every Tuesday, every Friday. Don't want you to miss a single one. So without further ado, the number 1 largest holding in my dividend stock Roth IRA is... hold on, just a minute. Pepsi. Now you're probably familiar with Pepsi as a huge beverage company. They make Pepsi, Mountain Dew, they have Tropicana orange juice and other premium juices. They also have the Frito-Lay brand under them. They're big into snacks and things like that. And that is the reason why back in 2007-8, whenever I first invested in Pepsi, I chose Pepsi over Coke. Because at that time, Pepsi was much more of a well-rounded company. They were into the bottled water and the juices and the snacks, more than just the sodas. So that's why I picked Pepsi over Coke back then, and they've done great for me ever since. So Pepsi is the number 1 largest holding in my dividend stock portfolio. So again, Pepsi is a dividend aristocrat. They have paid out and raised their dividend for 47 consecutive years in a row. So within the next few years, Pepsi is just about a lock to become the next dividend king once they hit that 50-year mark. Pepsi also has a current 2.98% dividend yield, and I currently own 55 shares of Pepsi, currently valued around $7,500. So there you have it. That is the entire transparent look inside my dividend stock Roth IRA. Every stock I own in there. Now, if you have watched my 3 favorite dividend stocks to buy and hold forever, before you go and comment, "Hey Jay, where's Apple and MasterCard?" I do hold some dividend stocks outside of this portfolio. So yes, I hold Apple and I love it, but that is in my normal brokerage account. Same with MasterCard and a much larger stake in Visa. So if you watched that video, you're wondering why those weren't on this list, that's why. So I hope you enjoyed this kind of look behind the scenes, look at what I invest in. Leave me a comment down below. Tell me if you think my portfolio sucks. Tell me if you like it. Tell me what stocks we both hold. Tell me what I should invest in next. Hey, let's just have a conversation. So that's it for me. I hope you enjoyed this, and I will see you in the next video. ran to the store to buy this today just so I would have a little prop. That's how dedicated I am to my stupid bits. All right. Whew. I have a feeling that's going to be a long one, so have fun.